Welcome back to the deep dive. Today we're looking into a layer 1 blockchain, one that's made a pretty bold claim, actually.
Oh, yeah. What's that?
Delivering Web 2 speed for Web 3 applications. We're focusing on the SEI network.
Ah, SEI.
Right. Yeah. And our mission, really, is to kind of cut through the noise and figure out how they plan to solve what feels like crypto's oldest headache: speed versus usability.
It's a really important one to look at. SEI represents a pretty significant strategic pivot, you know?
Pivot. How so?
Well, they didn't start out trying to be like the next big Ethereum killer or anything. They actually began as a more specialized sort of niche trading network.
Yeah.
But then with their V2 upgrade, they just completely transformed. Became the first parallelized EVM blockchain.
Wait, hang on. Parallelized EVM.
Yeah.
That sounds complex. Are they basically trying to smash together two different worlds?
Pretty much, yeah.
Like taking the huge developer community from the Ethereum virtual machine, the EVM, and mixing it with the kind of crazy speed you usually only see on non-EVM chains like Solana?
That's exactly the idea.
But is that even possible? I mean, technologically, without making some massive compromises somewhere?
Well, that's the big bet they're making, isn't it? They're positioning themselves right in that that technological sweet spot, or trying to, anyway.
The sweet spot being
The first really, really fast chain that also speaks the language, you know, Solidity, that like 90% of Web3 developers already use.
Okay, let's unpack this, and maybe we should start right at the beginning. What's the core problem SEI was actually built to solve for you, the user? Why is Web3 often so slow when things get busy?
Yeah, the fundamental issue, the bottleneck, it really lies in how most traditional blockchains process information. They use something called sequential execution.
Sequential, okay, meaning one after the other.
Exactly. Imagine you've got, say, 10 different programs running, all trying to get transactions done on the network. Standard systems like, classic Ethereum basically force transaction 1 to fully complete, get finalized, everything before transaction 2 can even start.
Ugh, that sounds like waiting in line at the bank, but for like every single digital interaction.
It's the perfect analogy. It's like a single lane highway hitting rush hour. Total gridlock.
Right.
And the founders of SEI, they saw this up close. One of them, Jog, he was actually a software engineer at Robinhood.
Oh, interesting.
Yeah, and he saw the system just buckle during that whole GameStop thing back in 2021. Centralized platforms couldn't handle the volume.
And in decentralized systems.
It's even worse sometimes. The network becomes unusable, transaction fees go through the roof, everything just freezes. That inefficiency is the core reason why stuff like serious institutional trading, high-frequency trading, complex derivatives, even just fast payment systems, they've mostly stayed away from Web3.
Because if your trade takes 5, 10, maybe even 30 seconds to confirm, you just can't compete, right? Not against traditional markets where things happen instantly.
Exactly. You can't. That latency, that's a complete deal breaker for finance. SEI's whole reason for being is to get rid of that latency.
So Web3 can actually handle the instant demands of modern finance. And maybe even things like fast-paced online games, GameFi.
Precisely. That's the goal.
Okay, so that leads us to their idea, their solution, which, when you put it simply, is about combining top performance with compatibility.
Yeah, they understood something critical. Speed is great, obviously, but forcing developers to learn totally new programming languages like Rust or Move, which some other fast chains use, that's a huge barrier.
Right. People stick with what they know.
Exactly. And the Ethereum developer ecosystem, using Solidity, it's just massive. It's too big, too valuable to just ignore.
So here's where the strategy gets really interesting, or brilliant, maybe. If the standard EVM is that single lane road we talked about, SEI V2 is like the world's first, multi-lane highway that speaks every language. Is that a fair way to put it?
I like that. Yeah, it offers the kind of performance, the speed you usually link with non-EVM chains, but crucially, it stays fully compatible with the Ethereum virtual machine.
Which means for developers.
It means that the, estimated 90% of Web3 developers coding in Solidity, they can basically just copy their existing smart contracts.
This is copy-paste.
Pretty much. And deploy them on SEI, potentially like 100 times faster, without needing to rewrite a single line of code.
Wow. That massively lowers the barrier to entry, cuts down the time it takes to get something launched.
Huge difference. It's a strategic shortcut, really.
But wait a minute. If speed is the absolute top priority, why even bother with the EVM layer? Wouldn't they be even faster if they just ditched it, went fully proprietary like some others, Doesn't keeping EVM compatibility add complexity, maybe slow them down, even just a little?
Yeah, that's the core tension in their design, you're right. And it's definitely a calculated trade-off.
Okay.
They believe, or seem to believe, that any slight performance hit from keeping EVM compatibility is, well, massively outweighed by the benefit of attracting that entire existing developer base.
It's like having the fastest car, but nobody knows how to drive it.
Exactly. What's the point? SEI is building the fast highway, but making sure everyone already has the right kind of car to drive on it. They're providing infrastructure the industry, already understands.
That makes a lot of sense, actually. They're prioritizing the network effect, getting people on board first.
Mm.
And their ambition reflects that, right? They want to be the decentralized NASDAQ.
That's the stated goal. And the main institutional settlement layer for digital assets globally. Big aims.
Huge aims. And to pull that off, you need more than just clever strategy. You need some serious tech under the hood.
Definitely. SEI gets its speed mainly from two big innovations. People often lump them together as the twin turbo consensus, but it also includes their specific way of doing parallel execution.
Okay, let's try and simplify the techie bits.
Yeah.
This is where the speed really comes from.
Uh-huh.
How does this optimistic parallelization actually work in, simple terms?
Okay, let's try an analogy. Think of a huge, really busy warehouse, like Amazon's maybe. Workers are packing orders, those are the transactions.
Yeah.
In a normal sequential system, worker A has to find the item, pack the box, tape it shut, everything, before worker B can even start looking for the items for box 2.
So one box at a time.
Very slow. Painfully slow. SEI flips that completely. With optimistic parallelization, imagine you have, say, 100 workers all grabbing boxes and packing items at the exact same time. That's the optimistic part.
They just assume it'll all work out.
They assume, and it's usually a safe assumption, that most workers won't need the exact same item or the exact same roll of tape at the exact same microsecond.
So they just process everything in parallel, hoping for the best.
Sort of. They execute it all simultaneously. It's only after all the boxes are packed, metaphorically speaking, that a supervisor quickly glances over the work.
And if there is a problem, like two workers did try to grab the same thing.
Right. If the supervisor sees that worker A and worker B both tried to grab the exact same widget, which means, in blockchain terms, they tried to change the same account balance or interact with the same piece of data.
Then what?
Only those two workers, worker A and worker B, have to stop, figure out who goes first, and then just redo their specific two-box sequence one after the other. Everyone else's work is already done.
Ah, I see. So you only reprocess the tiny, tiny fraction of transactions that actually clash. You don't hold everything up.
Exactly. It saves an enormous amount of time. You get massive efficiency without really giving up security.
Okay, that's a huge leap.
Yeah.
What's the second part, the twin turbo consensus?
Yeah.
You mentioned optimistic block processing.
Right. This part is about how quickly the network agrees that a block of transactions is final and irreversible.
Transaction finality.
Uh-huh.
Okay. How do they speed that up?
Well, most blockchains are pretty conservative here. The validators, who are like the network security guards, they wait until every single vote on a new block is counted. They reach a full consensus,
Right.
and only then do they actually start executing the transactions inside that block. It's safe, methodical, but again, slow.
And SEI, they cut in line somehow.
Yeah, you could say that. On SEI, the validators actually start executing the transactions in the proposed block before the final consensus vote is even finished.
Seriously? While the voting is still happening?
Yeah, they run the execution in parallel with the voting process itself. They're being optimistic again, right? They bet the block will be approved.
And if it is approved?
Then the work's already done. The results are applied instantly. If for some reason the block gets rejected, which is rare, they just discard the results they calculated optimistically. No harm done, just a tiny bit of wasted computation.
Wow. That must dramatically shorten the time between hitting send on a transaction and knowing it's absolutely final. The sources we looked at highlighted sub 400 millisecond finality.
That 400 meters, yeah, that's the number to remember. It's incredibly fast, like up to 30 times faster than some other major chains.
And that speed, that near-instant finality, that's critical for.
For high-frequency trading, absolutely. But also for things like settling trades involving tokenized real-world assets, RWA. Think tokenized stocks, bonds, real estate. For those, compliance and speed are non-negotiable. You need that instant certainty.
Which explains why the traditional finance world, TradFi, is suddenly paying attention.
Exactly. It's a mandatory requirement for them.
Okay, perfect segue then, because all this amazing speed It doesn't mean much without adoption, without users. But SEI seems to have actually landed some major institutional players. Kind of seal of approval few other layer ones have managed.
They have, yeah. They've played their cards very smartly, I think, by positioning themselves as a compliance-first infrastructure, reliable, fast. That's opened doors to the big dogs in traditional finance.
Okay, name names. Who are these big players validating SEI's approach?
Well, the names are about as big as they get. BlackRock. BlackRock. As in the world, the largest asset manager, $10 trillion kind of BlackRock.
BlackRock, yeah. They, along with Hamilton Lane, another major player, are actively tokenizing funds and assets on the SEI network. Wow. So they're not just kicking the tires, they're actually using SEI for serious RWA initiatives.
Precisely. It positions SEI right at the forefront of that whole RWA movement, which is seen as this huge bridge between traditional finance and the blockchain world.
It's like a massive vote of confidence in the tech.
It really is. And it's not just institutional finance either. Look at payments. PayPal.
PayPal, what are they doing?
They've integrated their stablecoin, PYUSD, directly onto the SEI network.
Okay, that's huge too. That connects SEI to one of the planet's biggest payment ecosystems. Millions, maybe billions of potential users.
Right. So you've got the weight of institutional capital, like BlackRock, on one side, and the potential volume of mass market payments through PayPal on the other. It's quite a combo.
So they seem to be attracting both the suits and the everyday users simultaneously. What about the more crypto-native stuff, like GameFi, developers, regular users? Are they getting squeezed out by this focus on TradFi?
Well, the data we have suggests they're managing to grow both. The network's seen pretty strong daily active user numbers, the DAU count, at points up around 900,000 users a day.
Driven by what, mainly?
A lot of it seems to be driven by gaming projects, GameFi, that are attracted by that super fast finality. Makes for a much better gaming experience, obviously.
Makes sense.
Plus, essential tools like MetaMask Wallet work natively with SEI. That makes it easy for the millions of people already using EVM chains to just try SEI out.
So they're building a network that could, in theory, host a complex BlackRock financial product and a fast-paced shooting game at the same time.
That seems to be the ambition, yeah. Okay, but if we connect this to the bigger picture, we've talked about all this incredible speed, BlackRock, PayPal.
Yeah.
It sounds amazing. But this kind of performance, it never comes for free, does it? There has to be a trade-off somewhere.
Yeah, that's what I was wondering. What's the catch? What are we giving up to get that sub-400 millisecond finality?
The main one, the really unavoidable one, is centralization.
Ah, okay.
What?
How so?
Well, achieving that level of performance, especially the super fast finality, it relies on keeping the number of validators, those network security guards we talked about, relatively small.
How small are we talking?
The source material we looked at says SEI currently operates with only 40 active validators.
40. Just 4 is, that sounds tiny?
Yeah.
Compared to other networks that might have thousands or even tens of thousands of nodes contributing to security. Is that really decentralized?
Well, that's the million-dollar question, isn't it? Or maybe the billion-dollar question. It makes the network incredibly efficient, incredibly fast, yes. But it absolutely raises serious concerns about things like censorship resistance.
Meaning, could those 40 validators collude to block certain transactions?
Potentially, yes. Or be pressured by governments. It also impacts the network's resilience. What happens if a significant chunk of those 40 go offline? It's a very different risk profile compared to a network with thousands of validators spread globally.
So the community, the users, they have to decide if the benefits, the speed, the institutional adoption are worth that centralization risk.
Exactly. It's a fundamental compromise SEI has made.
Okay, what about other risks? Let's talk money. The sources mentioned something called the vesting overhang. That sounds ominous. What is it?
Yeah, it's a major economic factor you have to consider if you're thinking about the SEI token itself. It refers to the huge chunk of the total token supply that was given to the founding team and early private investors, but hasn't actually been released onto the open market yet.
How much are we talking about?
It's significant. A massive 40% of the total supply. That's 4 billion SEI tokens.
Wow, 40%. And the supply is just waiting to be sold.
Not exactly waiting. It's unlocking gradually over time. The process, the vesting schedule, started back in August 2024.
And how long does it last?
The private investor tokens unlock linearly, meaning steadily, over time, until 2027. And the team's tokens keep unlocking all the way until 2029.
So for years to come, there's this predictable, constant stream of new SEI tokens potentially hitting the market.
Exactly. It creates what economists call a supply overhang, or just constant sell pressure. The demand for SEI has to keep growing massively just to absorb that new supply and keep the price from falling. It's a significant headwind.
Okay, so centralization and tokenomics pressure. Anything else?
Well, just the sheer scale of their ambition, maybe. We talked about the innovation they've already achieved, which is impressive, but their future roadmap, they call it SEI Giga. It's aiming for something like 200,000 plus transactions per second.
200,000, that's Visa level almost.
Right. And they plan to get there with a completely new consensus system they're calling Auto-On.
Sounds fast, but also complex.
Extremely complex. Building the first parallelized EVM was hard enough. Completely overhauling the core consensus mechanism again. That carries huge execution risk.
Meaning risk of delays, bugs, things just not working as planned.
Absolutely. It's exciting for sure, but it's a very high-stakes, long-term technological gamble they're taking.
Okay, so let's try and wrap this up. If we had to summarize this deep dive for you in just a sentence or two.
Go for it.
SEI is, right now, the world's fastest parallelized EVM blockchain. It's made a clear trade-off, sacrificing some degree of decentralization to hit unprecedented speeds. And it's using that speed to attract huge institutional players like BlackRock and PayPal, positioning itself to become, potentially, the main settlement layer for digital assets.
That covers it pretty well. And, this raises a really important question for the whole space.
Good.
Given where things are heading, the need for institutional compliance, the sheer amount of capital knocking on TradFi's door, wanting to get into crypto safely, and the absolute user demand for things to just be fast.
Yeah.
Does the future of crypto, or at least a big part of it, actually lie in prioritizing that institutional trust and that extreme speed, even if it means compromising on the sort of ideological purity of absolute decentralization? SEI, with its 40 validators and its BlackRock partnerships, it's maybe the biggest live experiment we have right now trying to answer that exact question.
It really feels like the network that successfully onboards the BlackRocks and PayPals of the world might end up defining the next phase, regardless of how many validators it has. An interesting thought.
Definitely one to watch.
Absolutely. Okay, well, if you found this interesting, please like and subscribe to the channel. We do all the complex research so you don't have to.
We'll catch you on the next deep dive.
Hey, see you next time.